Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and we're going to kick things off today with a conversation with regard to performance for the month of June. Then we're going to talk about our short-term analysis of this market, and then the really big story, which is how we plan on shorting this market, because in the end, what has been going on with the Federal Reserve, and not even just the Federal Reserve, but the central banks, the central banksters around the globe, they are setting us up for a major market crash. And you need to be aware of the three charts to watch to determine when it's time to get short of this market. But in the short term, you can't short this market. You have to be long of it. The path of least resistance is clearly to the upside. So before we get to the charts and we talk about the stocks that we're looking at for the next trading week, let's talk about performance for the month of June. We closed out. These are our short-term swing trades, and these are not big percentage gainers. REGI, 2.21%. Baidu, 3.81%. Dust. Actually, there were two trades on Dust, one for profit. This was a hedge versus our NUGT position, which I'll talk about in a moment. 2.6%. There was another hedge which we profited 7%. I need to add that. And you may be saying, these three trades, big deal in the grand scheme of things. Well, if you annualize them, they are a big deal. And these are not our core holdings. When you take a look at our core holdings on a monthly basis, NUGT up 55.68% this month alone. USLV, the leveraged ETF putting you long of silver, up 15.66% this month alone. Bitcoin, up over 17.5% on the month alone. So June is turning out to be one of our best months in quite a while, because we had been building positions incrementally in anticipation of a major breakout of gold, silver, Bitcoin. Why? It's because we knew that at some point in time in the very near future, the Federal Reserve was going to pause because the markets could not sustain interest rates above 3%. Now, yesterday for members, what we did is we spent a lot of time on our strategy moving forward. We are formulating a strategy on how best to profit to the long side at current and what to look for when we believe that this rally has come to an end. What will be the indicators that we are looking for to determine when it's time to short this market? And there will be a major league short opportunity of this market, and great fortunes will be made. And those who are not short of this market, unfortunately, with all of the debt that has been accumulated, not just in this country, but around the globe, the standard of living in the United States, for those who do not get wise really fast, because the dumbing down of the American population is complete. The central banks, the governments around the globe, all they want you to do is click likes, leave comments on Facebook posts, and go shopping with your credit card until your fingers bleed. This is the reality. They don't want you paying attention to what they are doing. And what they are doing is putting not just your kids, but your grandkids in debt, in servitude for generations. This is a horrible setup, and it's not going to end well. Will you be prepared? So yesterday, again, I prepared an outline with members of what to look for when the charts tell us that it is all over. Confidence has been destroyed, and it is time to short the market. That time is not now. Right now, we are in the early stages of a new Fed rate cut cycle. And they are not just going to cut rates in July, folks. They need to come out with a bazooka. It's not going to be a 0.25% cut. It's going to be a 0.5% cut. Why? It's because if it's a 0.25% cut, it's not enough. The junkies on Wall Street need more. And then what you're going to hear is that it's not enough. We need quantitative easing. Meaning the Federal Reserve will need to start the printing presses up and start buying back our own debt. In short, there is no end in sight. If you're not an owner of gold, silver, and to a lesser extent, and highly speculative cryptocurrencies, you are missing out on a major, major opportunity because we are in the early stages of a breakout. But to go buying these stocks now, to go buying silver and gold right now, it's a little bit too late. You need a better setup. Silver to a lesser extent, because we may be buying more silver earlier this week. So the three charts that you need to watch out for: the 30-year bond price. And this is what I discussed with members yesterday. This is your lifestyle. This is what has been propping up the American dream since the beginning of the bull market, which started back in 1982. Think about that. The 30-year bond has been in a bull market since 1982. Unfortunately, that's when our debt skyrocketed as well. And America has been living on a credit card ever since. It all changed, though. This was the beginning of what I perceive to be the end of this bull run. And that is the break of support back in July of 2018. You can see that we have rallied back. The Federal Reserve went on pause and bonds rallied back. The question is, do we rally to new highs, or do we put in a lower high and break to a new lower low? If we do, it's all over. So if you see bonds drop, and if you see the dollar, which has already begun to break down, break and move lower with bonds, that is a crisis of confidence. So we already have one nail in the coffin. The dollar is rolling over now. It is weak and will probably get weaker. Will it be a straight drop down? Probably not. Why? It's because the ECB is going to pull out a similar bazooka next month when they meet. So all it is going to be a race to the bottom for paper money. That is why you need to own gold, silver. And what will be the catalyst for both bonds and the US dollar to drop like a rock? Look no further than the TIPS, Treasury Inflation Protected Securities. The Federal Reserve, Fed Chair Powell the other day came out and said, I'm disappointed. This is our Fed chairman, folks. I'm disappointed with inflation. And he didn't mean that inflation is too hot. He meant it was too low. But when you take a look at the bond market, this is the TIP market, Treasury Inflation Protected Securities. They're at all-time highs. Why would TIPS be at all-time highs when there's no inflation? People, meaning institutions, buy TIPS to protect their portfolios against inflation. If there were no inflation, why is the TIP market in fuego? We are all being royally lied to. So short term, we are very, very bullish on the markets, particularly precious metals and cryptocurrencies. Longer term, I think that we are setting up for the greatest shorting opportunity ever. And I think the gold trade is going to last a very long time, along with silver. So get on board, please. Let's get to the charts that we are looking at for the coming week. Let's go over to TrendSpider. Now you can see that we at current have RSI with a 70 handle. It's even higher on the NUGT. Last week, this is a weekly chart with a monthly overlay. Monthly overlays or overlays of other than the primary chart, meaning this is a weekly chart, but I want to see where monthly resistance is on TrendSpider. And before we even get into this, if you're watching this on YouTube, you want TrendSpider, click the link below. Use discount code CT25Z. You get 25% discount. And if you're watching this on the blog, click the link above. Again, CT25Z, the discount code. All right. Oh, and it's included with our silver and gold memberships. Let's get back to the chart. Okay, so when you're looking at this chart here, weekly chart, and I have a monthly overlay, that monthly overlay is going to show up in a dashed line. The primary chart being weekly, but I'm using a different time frame overlay. So that'll show up as a dashed line. Where to use simply the primary chart being weekly and the weekly trend lines, they would show up solid. Okay, let's take this off. Now you can see that on a monthly basis, we broke out last week. Now the question is, do we close above that? We may get a pullback here. We may not close above these resistance levels. So let's take off the monthly overlay, bring up a weekly, and you can see that we closed out last week very strong. And in all probability, we are moving higher, and this upper band of resistance will be our guide. It will act as our upper band of the rising uptrend channel. Now, we will, at some point in time, hit it. We will pull back, ideally put in a higher low, and that will create a rising lower band of support. So the GDX is looking good to the upside here. But as we near overbought levels on our position being the NUGT, I want to put on a hedge. Now, it's either going to be I sell covered calls or I hedge with dust, which is what we've done twice before in the past 30 days. Let's bring up dust. So we'll use dust on a daily basis, and you can see that it's getting beaten like an unwanted stepchild. Now, what TrendSpider has done this past week is that they've allowed you to now annotate indicators. So I'm glad that they listened to one of the suggestions that I brought about, and probably other traders as well. And I'm looking for a rally here on RSI and Stokes because they are a bit oversold. Now we have RSI on a daily basis at around, what, 18 handle? We had a bearish key reversal on Friday. So we'll be looking to hedge a portion of our NUGT position by putting on a hedge of DUST and or selling covered calls against our NUGT position, because at current, the NUGT is sitting with RSI at around 86. We flashed a bullish key reversal on Friday. I would expect the shares to move higher early next week, but we need to face reality. We are becoming very, very overbought here. Longer term, I think that we are going a lot higher. I do not want to sell my position. However, I do want to put on a hedge and profit from any pullback. So we're kind of trading around our position here. And again, it's not going to be 100% hedge. It'll probably be between 20 and 40% hedge of our current position, maybe even 50. Now let's segue away from precious metals and talk about the banks. The banks did not have a great week last week, and it's no shock because yields dropped down. You can see that we have resistance above here on the banks on a daily basis. We'll take the daily trend lines off, look for weekly resistance. All right, so if we break out, we could rally up to this upper band of resistance here in green, which is rising and will change. But we could see the mid-40s pretty easily on DPST. That's the regional bank ETF. The reason why I am looking at the banks right now is because I don't believe that this unsustainable downtrend in yields, in the short term anyway, is sustainable. We discussed this with members yesterday on the week ahead commentary. I think that we are going to press higher here on yields in the short term, and that will benefit the banks, and I think that the banks will probably break out. That's a bit of a contrarian trade, but more to come on DPST members. Let's bring up TPX, Tempur-Pedic. We're going to go high level here, beginning with a weekly chart. And you can see that we had a beautiful breakout last week above resistance. Let's throw some trend lines up here. And this is the value of using TrendSpider. Click of a button. And you can see that we bounced right up and into the upper band of resistance. So we may get a pullback here early next week. That pullback is probably to be bought because longer term, this chart pattern is looking really good. We had a great long-term consolidation, a multi-year consolidation, and we have now broken out above stiff resistance on a weekly basis and on a monthly basis with these dashed trend lines. You can see that we broke through monthly resistance as well. So the path of least resistance is clearly up. Just remember, on a weekly basis, we had a bit of resistance. Let's go to a daily chart. All right, so on a daily basis, we have a bit of resistance here. We're going to need to see a new weekly high, a retest of support, and then a continuation move higher before we get long of this position. Let's take the daily trend lines off, throw up weeklies, and yeah, you can see right above here, we have a bit of resistance. So we'll be looking to buy a pullback here on TPX, and we'll look to build on strength and as we clear resistance levels. Let's bring up my happy chart. It's only because it's Ferrari. Let's start with a monthly chart, and you can see that we have a breakout. We broke out last month, being May. We pulled back this month, retested the breakout point. Prior resistance is now support, and we are now pressing higher. We took out the highs of May, which is great stuff. Weekly chart. So here's the breakout line, and you can see that it's been a nice move higher here, and we're a bit extended. We have the third standard deviation Bollinger Band, which is above. We're not tapping it, but we're close to it. A bit of a third rail in that we do not want to buy as we are flirting with the upper band of the third standard deviation Bollinger Band. I would rather wait for a pullback. So let's check out the daily chart. The daily chart looking good. We're consolidating sideways. Let's throw up some resistance levels and support levels. You can see that we're bouncing along support. Immediate resistance above is at around 166.10. If we break through it, we're going to be using this upper band of resistance here as a guide to determine what is our upper band of resistance on a daily basis. Now, I will caution, RSI at current is at an 80 handle. So we're going to need to get a bit of a pullback or sideways consolidation, thus alleviating this overbought condition. I would not be a buyer immediately on Monday morning. Members, more to come as we analyze the intraday charts as well. The next chart up, Celgene. Okay, so pharma last week and the biotechs and healthcare overall did really, really well last week, closing at the highs of the week. Celgene is a standout. It showed up on our screener. Let's go to a weekly chart first, and we'll come to the daily chart. And you can see that we have a bit of an inverted head and shoulder setup. Left shoulder, head, right shoulder. And here is our neckline. And we are broke out here. We're consolidating. Now we are breaking out yet again. And we did so last week. We have RSI, which is rising. Stokes rising. I think that the shares of Celgene move significantly higher from here. Daily chart, we'll be sending out an alert to members. Daily chart, we saw on Friday an outside reversal day, a bullish key reversal. The path of least resistance is clearly to the upside. RSI is at 70, a little bit overbought, but still attractive. Now, when we throw up our trend lines to identify where we have support and resistance, you must know that, right? Click the button, and there you have it. We're heading up here. We're gonna be over $100 per share very shortly on Celgene. Members, stay tuned for an alert. Comscore, symbol SCOR. We've been talking about this stock for a while. It at current has RSI at 13.41. It can go lower. Now, we do have historical support below. Members will discuss where that historical support level is, and we will be looking to buy the shares of SCOR at that level. Why is it? It's because we know that once we hit that support level, or we are very confident, I shouldn't say we know, that once we hit that support level, there are a lot of shorts in this name, and they will be looking to cover as the squeeze begins, and we want to be a part of that short squeeze to the long side. And you can see using the heat map that we were consolidating for several days, and that congestion area, which should have acted as support, failed, and we broke down on Friday. So this trading range here is now going to become resistance. So when we buy it further down, we'll be looking to sell it back up and into this resistance level. So members, we need to be very, very deliberate. Let's use our historical support levels to determine when to get involved. And then we will look to buy Comscore aggressively enjoying the short squeeze higher. So more to come. We'll be sending out a trade alert. And that is it for this week, folks. Everybody have a profitable trading week. Enjoy the remainder of your weekend and be well.